Hello guys, welcome back to my channel once again. Today this is CN on the screen and you are watching CN Great Counsels and Forex Trade. And in today's video I bring to you what is going to be one of the very best strategies ever seen in the history of trading boom and crash, and it's a very powerful strategy. It's a VIP strategy and I call it money milking machine VIP strategy. Money milking machine VIP strategy, and the condition just met on 5 minutes time frame, and is about to be met on 15 minutes time frame. So we are taking a sniper entry from the 5 minutes time frame. I just took 2 trades, and then I'm going to analyze the market now, and I'll give you the setting to this strategy. So do not click off, make sure you watch this video to the very end. And if you are new on this channel, I'd like you to hit that subscribe button and turn on the notification bell so that whenever I upload a new video, you'll be the first to watch it. Also, share this video with your friends, with fellow traders, so that we'll make the money together. We want to reach larger audience. And like I do say, it doesn't take you anything extra to subscribe to a channel like this. Okay, it's a way of supporting us, it's a way of encouraging us, so don't hesitate to do so. Also, give this video a thumbs up like if you found value in it in the course of watching the video. Also, I want to quickly tell you that the forex market is real. Okay, you can make money, you can live off it. And let me quickly give you the setting to this wonderful strategy. It's no other strategy. It's a variant of the sharpshooter strategy that I posted last time. Sharpshooter strategy. And in case you did not get the setting, let me quickly give you the setting. But remember, this is a different explanation as the strategy works differently on higher time frame. You use it to make more money on higher time frame. So on the main chart, I have the fractals, and these are the parameters. Okay, you know, I hardly trade without having fractals on my channel. Then on the indicator window 1, we still have the relative strength index with a different setting. Okay, with a different setting. The period is 20. You apply it to close. The styles is 3 pixels. Okay, the levels, this is where it's a bit different now. The levels we have 90, 60, then we have 40, which is gonna have our money making machine VIP strategy. Okay, so let's just put it money milking machine. All right, money making machine. Yes. And then you have your last level to be 10. Okay, then the style is 3 pixels and color is purple. You go on and click done, and then we have the moving average. Period is 11, shift is 0, method is linear weight. You apply it to close, then the style is 3 pixels, color is red. Then you click done. Okay, so how do you trade with this strategy? I want to quickly let you know that this strategy is for higher time frames. You can as well use it to trade on 1 minute time frame, but you make more profit on higher time frame, and it's almost like with 100% accuracy. Forget about this spike that you just saw. Okay, remember I did tell you need to start seeing a bigger picture of the market. Okay, now how do you trade with this strategy? First and foremost, you are looking at the moving average, the red moving average. You want it to get, this is the zoom level first and foremost. Okay, you are using the last zoom level. That is, look at it, you zoom out completely. That is the zoom level you are using. You zoom out completely, and your chart position remains where you have the dollar icon. Okay, All right, let me quickly show you. Your chart position remains here. Okay, this is your chart position. Okay, all right guys, this is your chart position, and then you are looking at the moving average period 11 to get to overbought region. Okay, this is for boom. Whatever I say for boom, the opposite is the case for crash. You are waiting for it to get to the overbought region if you are looking out for a sell. Now you are also looking at the RSI to cross the 60 level. Okay, yes, if that happens, then you wait for the moving average to make a curve bouncing off from the 90 level, which is the overbought level. As soon as it bounces up from the overbought level, that is the 90, as it bounces up and makes a curve trying to come down, okay, then you will look at the relative strength index, the blue relative strength index. If at that point that the moving average is making a curve to come down, the relative strength index is moving downward, because normally the relative strength index moves faster and further. Okay, at that point that the moving average is making a curve to come down from the overbought level, and you look at the relative strength index, as soon as it touches the 60 level, as soon as the relative strength index touches the 60 level, you place your trade immediately, and then you ride the trade until, where is your exit point? Your exit point is when the relative strength index touches the 40 level. That's for boom. Okay, if the relative strength index doesn't touch the 40 level, you don't have to exit the trade. But then, where are you going to place your stop loss? Your stop loss is going to be above the very recent high, just somewhere here, above the very recent high. Okay, above the very recent high, that is the recent high just before your entry point. That's going to be your stop loss. Now let me take it once again. I did say that you are looking out for the red moving average to get to the overbought level. That is for boom. Now, as soon as you get to the overbought level, wait for it to make a curve bouncing off from the overbought level, which is the 90 level of the relative strength index. As soon as it bounces off and makes a curve, you look at the relative strength index line, which is the blue line you're seeing here, because normally the relative strength index line must be under the moving average. Okay, if it's not under the moving average, then it's not valid. It has to be under the moving average. So at the point where the moving average is making a curve from the overbought level coming down, you look at the relative strength index line, which is the blue line you're seeing. If at that point that the moving average is making a curve, the relative strength index has approached and it's touching the 60 level. As soon as it touches the 60 level, place your trade and ride the trade until the relative strength index touches the 40 level. That's your exit point. That's for boom market. Okay, now let's quickly backtest and see where our conditions were met. Okay, now look at this place. Okay, now the moving average got to this point, and then it made a curve coming down. It was at this point that the relative strength index touched the 60 mark. Okay, the 60 level. Now if you had placed your trade, though it spiked a little, but it still went down until the relative strength index touches the 40 mark. Now trace it upwards. Look at it here. Let me quickly show you. All right, it touched here, and then you're supposed to take your trade and you ride it until this place. Now let's trace it down, up. Let's trace it up. This would have been here, and then you would have taken your trade, okay, until this point. All right, this is 5 minutes time frame. That would have been huge money for you. Okay, so that's it. Now let's keep back testing. Beg your pardon, let's back test more, and then I'll show you on higher time frame. Okay, now look at this. It also took place here. Look at the moving average touched here, and then the relative strength index touched the 60 level. If you had taken your trade, you would have taken this trade up till this point, and then you exit. All right, let's keep back testing. Let's back test more. Okay, now this was valid as well. Remember, you would have taken your trade somewhere here, and then even though it's spiked, that's why I said your stop loss should be above your entry, above the very recent high, okay, just before your entry. Now if you have taken this trade, even though it spiked, you would have still held until the relative strength index touches the 40 mark. Okay, now your profit would have been from here, okay, just from here down to this place. This would have been your entry. Oh, please, I beg your pardon. This would have been your entry. Yes, you would have taken the trade from here, okay, down to this place. Down to this place. This would have been your profit. Okay, so let's backtest a little more. Now the condition was also met here. Look at it. Look at it. You would have taken your trade down. Okay, now let me quickly show you. Yes, it was made here. It was made here. I'm taking your trade down. Okay, yeah, to this point. All right, so that's it on boom. That's it on boom. Now, why did I take this trade? Remember, I told you that there's a kind of alignment. Okay, I'm looking at an alignment. Look at, even though it's spiked, we're back into profit. Okay, because even if I want to end my trade with the signal given by the 5 minutes time frame, I'm still going to ride this trade until the relative strength index gets to 60. Okay, gets to 40. Please, I beg your pardon. The entry point is 60, while your exit point is 40 for boom. Okay, now, but I'm looking at an alignment on 15 minutes time frame. I'm looking at an alignment on 15-minute time frame. Now, if you look very well, you discover that the moving average has gotten to the overbought level, and then the relative strength index is below it and is approaching the 60 level. Now, if I want to take more trades now, whenever it gets to the 60 level, I'll take more trades. Okay, and then that's gonna take me riding it down until the relative strength index gets to this place. Remember, I took a sniper entry on 5 minutes time frame because the condition was also made there. Now, if I look at 30 minutes time frame as well, I will know if there's going to be several alignments. Yes, there's going to be an alignment as well, and I may likely take more trade and ride it until the relative strength index, okay, gets to 40 as well. Remember, the condition is met here. The first condition is met, and then the moving average is making a curve, and we are not going to take more trades because we've taken trade according to the signal given unto us by 5 minutes time frame. Okay, guys, so aside that, okay, I can actually spot another move by the market. And you remember that I said that Trendline is one of the most obeyed trading pattern on boom and crash. Now, I discovered there's another move, okay, by the market. There's another move by the market. And I'm going to draw a trend line to show you that I have another confirmation, okay. Now, if you look, you'll discover that the market is making a kind of a move somewhere around here. Okay, let me quickly show you that. Yeah, yes, okay, yes, you can decide to take this trend line, or you take this. Okay, this is better. Yeah, this is better. Okay, this is a move that is made by the market, and I'm looking at it that this trend line is going to be respected because it has actually respected it. Yeah, somewhere here. Okay guys, let's put it well. Yes, just a moment please. Yes, we can decide to put it this way. Okay, now you see that the market has made a touch somewhere here, here. Okay, yes, and here. Okay, so, and our conditions met as well. All right, hope you can figure that out. Now I'm expecting this market to push down. Okay, now there are many confirmations here, and if you look very well, you will also see that this is an end. Okay, so I'm looking at this leg coming down. You combine a whole lot of things to trade. Okay, you combine so many things to trade, and this is a high probability trade. Just as you can see, it's a high probability trade. So this is how you trade with this strategy, and this is for boom. You can trade with it on boom 500, boom 1000, crash 500, crash 1000. Just stick to these conditions, but remember that the opposite is the case for crash market. Now let's quickly check crash market to see what is happening there. Yes, and you can trade with it on any time frame. Remember I said the opposite is the case for crash. Okay, now for crash we are looking at the moving average, red moving average, getting to the oversold level. Now this is just a typical example. Okay, and this is 15 minutes time frame. We are looking at the moving average getting to the oversold level, and then the relative strength index above it. Remember that for boom, the relative strength index must be below the moving average, but for crash, the relative strength index will be above it. Just as you can see, this is what I mean by being above the rate. Okay, yes, this is the moving average, and the relative strength index is above it. Now when it's above it, and then the moving average is at the oversold level, just as you can see, and it's making a curve to bounce off from the 10 level of the relative strength index. Okay, now you look at the relative strength index over here. As soon as it makes a touch, okay, as soon as it makes a touch on the 40 this time, okay, you place your trade, okay, and then you ride it until it touches the 60. Okay, this is the 60. I hope that's taken, guys. That's your exit point. Okay, that exit point is actually your TP1, and your TP2 is until the moving average itself touches the 60. Okay, I didn't say that when I was explaining for boom. The second TP is until the moving average itself touches 60 for crash, and then for boom, your second TP is until the moving average itself touches the 60. Okay, all right, touches the 60. This is supposed to be your exit point for the for the other for boom. Okay, yeah, I beg your pardon please. So let's get back to crash. Let me keep explaining. Remember that I said that for crash, the opposite of what I said for boom is the case. Now let's back test a bit so that I'll show you where the conditions were perfectly met. Okay, it wasn't met here, wasn't met. All right, you really have to be patient with the strategy because it's a money milking machine strategy. Okay, it's a money milking machine strategy. Now Let's keep moving. Now look at this place. It was made here. It was made here. All right. As soon as it touches, you ride it until this place, or until this moving average itself touches here, which would have been somewhere here. Okay. All right. Now let's keep back testing. Look at it here. It was also made here. Now if you had entered somewhere here, okay, you would have taken the trade until this point or this point for your second TP. All right. It's even better on a higher time frame. Okay, now let me quickly show you what is happening on daily time frame of crash. Okay, now this is crash market. Now if I am ready to take long term trade, now I would have placed my trade yes, maybe somewhere around, because this is not making a curve away now, but I would have taken my trade somewhere here. Okay, this is daily time frame. This is daily time frame. This is when it touched it. Okay, I would have taken my trade, and imagine what this means. Okay, this is 1 2 3 1 2 3 4 5 6 7 days. I would have been on this trade for 7 days, and it's still pushing. Okay, it's still pushing because the moving average is still making a curve away from the 10 level of the relative strengthness. So I'm looking at it that in the next few days or weeks, crash 1000 will keep pushing up, we keep making bullish movement. Okay, so that's how we trade with this strategy, guys. And let's get back to our boom where we placed our trade and see how the trade is going. You see, it's still moving down. Now if I want to exit this trade now, I'm free to exit the trade because our TP1, okay, is yet to hit. Okay, is yet to hit. It must get to this place. Okay, the relative strength index must get to the 40 mark. That's going to be our TP1. But then I told you there's going to be an alignment. Okay, now if I want to take more trades now, it's just very close to the point that I'm taking, or that I'm supposed to take more trades. Okay, now look at it. The moving average is making a curve. Okay, right, is about to make a curve on 15-minute time frame away from the 90 level. Now you discover that relative strength index is approaching the 60 level. Okay, which is supposed to be my entry, and then I can decide to take more trade and reduce the lot size and write the trade down. Okay, so I'm having double confirmation. So guys, remember I did tell you, and I've always said it, I will continue to say it, you make more profit when you start looking at a bigger picture of the market. Look at the market from higher time frame, and then you are good to go. You trade with ease, you trade with more confidence, you trade seamlessly that way, and it helps you to also understand what the market does on higher time frame. So if you've watched this video to this very end, then you're a dream fan indeed. I'd like you to hit that like button and subscribe to this channel. Also share this video and other videos with fellow traders so that we can get to larger audience. Okay, meanwhile, many thanks for watching this video today, and I'll talk to you in my next video. But before I sign out today, I want to quickly set my stop loss. Okay, I didn't do that all this while, so my stop loss is going to be above this place. Okay, this is 11388.4, 11388.4, 11388.4. okay, 11388.4, 11388.4. all right guys, and then my TP of course is gonna be until this relative strength index gets to this place. Okay, all right guys, many thanks for watching this video once again. This is CN Great Councils signing out for today.